Hey everyone, Paul here, and in this video I'm going to talk about stock margin, and specifically the record that was just set from the use of stock margin. So the total amount of margin used out there is over $722 billion. I mean, that's a huge amount, of course, but not just huge, it's a record. And when we look back on some of the other big years that saw a surge in the use of stock margin, there was the year 2000 and the year 2008, and both of those kind of time periods did not end up ending well for investors. So really, at the end of the day, this kind of gets back to what Warren Buffett likes to say, that you should start to be fearful when others are getting greedy. And when you're starting to borrow money against your stocks to buy more stock, that is greed. That is you saying, wow, look how much the market has rallied, and if this rally continues, look how much more I could continue to make. But that greed, eventually there's going to run out of buyers, run out of that capital that's going to be required to continue to send the market higher. And when we kind of take a step back, one of the things that can really hurt with stock margin is the fact that you don't get to decide when to sell your stocks. Your broker gets to decide when to sell your stocks based on your margin requirements. So what does that mean? That means that if you are highly leveraged with stocks, if you've borrowed a lot of money to buy more stock in your portfolio, and your stocks go down by 20, 30, 40%, if your margin threshold is hit, you're hit with what's called a margin call. And with a margin call, you have really two options. You have to quickly, within a matter of hours or days, deposit enough money to satisfy your broker, or sell enough stock. And in a lot of cases, if you're borrowing money anyway against your shares, you probably don't have that cash in the sidelines to just kind of jump right back in or put that right back into your brokerage account. So the more likely option is to sell your stock. Well, then all of a sudden, if that's not happening, probably not just to one person, that's happening to multiple accounts on a much wider scale, especially again, when you start having a record use of $722 billion in margin, and then you have all that stock being sold by force by their brokers. Well, all of that selling pressure pressures the price down, generally speaking, which can lead to a crash. So that's part of the fear of being able to buy a margin and scale like we're seeing right now, is that, again, you don't have control of that. So for me personally, I'm not a big fan of using margin on my account. I've actually had that feature just turned off because I want to invest with a long-term perspective, and I won't be able to invest with just the cash that I have available to me in my account, right? But I will tell you that there are some cases where I think that not using margin in a brokerage account, but for my own purposes, there are some cases where I'm a little bit more open-minded to using debt to buy stock. But before you attack me, let me explain what I mean by that. So what I mean by that is, let's say that I'm thinking about getting a used car. I'm in the market for something that is going to be reliable but not flashy. Maybe I'm going to spend somewhere between $5,000 to $10,000. Now, if option one, let's say I just pick something in the middle, I go get a car for about $7,500. Well, in that option, I just take the cash, I give it to the person who owns the car, and there you go, there's the transaction. But if I have the ability to, let's say, borrow at a 4% interest rate or a 3% interest rate to get that $7,500 with today's interest rates, by the way, for credit scores good enough, that's entirely in the realm of possibilities, getting a rate that low. But if you're able to get a rate that low and then turn around and invest it in the stock market, now to me, that's still something that you personally need to understand if that's going to be acceptable with your risk tolerance. You need to discuss it with your personal financial advisor. Don't just take some guy's word for it on YouTube, right? But for me, if I'm able to actually get a deal like that, I would be much, much more willing to do that than I would be to use margin directly. Because even think about that, now if all of a sudden, if I'm using that $7,500, I'm getting that loan, and then I'm taking that cash and putting it in the stock market, well, if those stocks fall by 50, 60, 70%, I'm not under any pressure to sell, because the bank that has that loan, as long as they're getting the payments from that, for that vehicle loan, they don't care that I own the stock, right? I mean, from their standpoint, they get paid or they don't. They're not going to force me to sell if I get to a certain point. So to me, seeing the fact that there's this record surge, I feel like I really wanted to have those two call outs. And the first call out is when you see people using margin by record amounts, and you look back historically, you should start to get a little cautious, okay? And that's, again, not to say that you can time the market. That's not to say that, oh, the record was hit, so the market's gonna crash tomorrow. That's not what it means at all. But it means to start getting a little bit more, I guess, prepared for that possibility that when you see people that greedy and you look at the past, that could be a possible outcome. So that's the first point, just the awareness of the record and what it potentially could mean for margin use. And the second thing was that if you are tempted to use margin, I just wanted to share from my own personal standpoint that I would personally much rather, be able to use, to a point where I was going to say that, hey, maybe I don't pay cash for a car, right? Or maybe it's like, you don't try to rush to pay off your mortgage and use those extra funds to invest. To me, that makes much more sense. And in a way, that's kind of like you're using margin to be able to invest in stocks. But again, they're not going to be able to have that control to force you when to sell. Okay, so wanted to have that quick update on the use of margin, on the record $722 billion in margin use. I'd love to know what you guys think. I mean, is this something that, are you currently using margin to trade stocks? Have you thought about it? Do you have questions about how it works? Is this something you're trying to stay away from? I mean, are you concerned at all hearing about, the margin use surging in 2000 and 2008 and then the subsequent, volatility that we experienced as investors? Love to know your thoughts. Let me know in the comments below, and I will see you next video.